So I'm Kaylee. I'm leading growth at Solo, and I'm joined today by Georgina, founder of Solo, Rob Frohwein, one of our advisors, and also McLean Wilson from Breakout Capital, one of our clients. So I will let Georgina introduce herself, and we'll get started.
Hi, everyone. Thank you for joining today. I'm the founder of Solo. We automate data collection and sharing between borrowers and lenders, trying to eliminate every manual process that exists in the process of collecting information from borrowers and just overall creating a better borrower experience. We're proud to be backed by over 100 banks, and some of you guys are here today, so thank you for making it. One of the first things that we hear when partnering with a bank is we want our lending experience to look and feel like Kabbage. And then when we show them what that actually means, which is replacing the clunky paperwork with a simple form and a couple logins to connect their accounts, the immediate question we get is, will asking borrowers to connect their accounts hurt the application conversion? And so after hearing this concern no less than like 50 times, I decided to call a friend, someone who has believed in Solo before our product ever went live. And so I'm really excited to introduce you guys to Rob. Rob is the co-founder and former CEO of Kabbage. He, in my opinion, has paved the way for online lending to even exist. Kabbage deployed over $9 billion in capital to more than 200,000 small businesses in real time and maintained an 85% conversion rate. They asked users to log into their bank accounts 10 years ago. So that was before Plaid existed or even was like common knowledge. And so sorry to date you, Rob, but with that, I'll hand it over to you.
Sure, absolutely. Yeah, we had the idea for Kabbage back in 2007, actually. I was working with a company that was using eBay APIs and other APIs from various marketplaces to identify counterfeit and fraudulent goods sold online. I thought, what if you could connect into this data and serve the small businesses that are selling on these online platforms? And this was a way for us to bring the experience both literally and figuratively to that customer. So we did that, required our customers to connect us to data and stay connected to that data so that we could understand how that business was performing, not just at the point of application, but every point thereafter. And I'll take a pause now, but you referenced the numbers. And we learned a lot, but we really, really wish there was a company like Solo that had existed back then. We used a company called Yodlee. Plaid, as Georgina said, didn't exist back then, but we got a bunch of raw data, and it required us to really figure out what that data meant, how to structure that data, how to utilize it in connection with making a credit decision, as well as doing other regulatory checks. And one of the things I'm most excited about with Solo is not only do they facilitate the acquisition of data, but they really facilitate the acquisition of data that can be used immediately in an underwriting and also, regulatory checks. And so that's really key. And again, I feel like the numbers that Georgina referenced, we would have dwarfed those numbers if we would have had access to a system like this right from the get-go. But now all of you have that opportunity.
Yeah. I'd love for McLean to quickly just introduce himself and Breakout. Breakout's been an incredible partner to work with. I'll let McLean kind of introduce what Breakout does, but they're going to be our case study for today to show you how the system is used, and McLean can talk about why they chose to partner with us and whatever else.
Sure. Yeah. Thanks, Regina. Thanks for having me on today. Breakout was started in 2016. Then I came in and acquired it in 2019. Since we've scaled the business to not quite to what Rob accomplished at Kabbage, but we're working on that. But we provide small business term loans to U.S. based businesses. Right in 46 or 47 states at the present moment. We've got personnel kind of scattered throughout the country, but we are headquartered in Charleston, South Carolina, where we are currently under there's snow on the ground, which is abnormal for us here. So everyone's at home right now. But in addition to small business term loans, think anywhere from $25,000 up to about $1 million. That's where the space in which we operate. We also do provide factoring and small ticket asset-based lending, and really just trying to layer on more products so that if there is a need within a small business that we can serve it. And we are very adamant about customizing our product mix to best serve the small business's need and not just cramming into, one loan product or one, factoring transaction. We're, very excited to be working with Georgina and team. She's definitely helped us automate a lot of the things that used to be on spreadsheets, and now they're not. And now it's a lot quicker decisioning process. We are unique in our space where, our origination channels are not your typical, brokers or ISOs. We do partner with banks of all sizes. We partner with banks that are, a couple $100 million in assets, and then we've partnered with banks that are, over $100 billion in assets as far as being able to provide, credit and capital to clients that either are not ready for a bank, or maybe the bank just want to extend enough credit and we'll come in and do a stretch piece. And, I won't get too deep into the product mix, but we'll provide, capital, whereas, it doesn't fit the bank's current model at that time. So again, thanks for allowing me to join and happy to be the guinea pig.
Love it. Thank you. All right. Rob, do you want to step back in? You're on mute.
Yeah, no. I usually do that because I just, don't want to disturb anybody. But one of the things that, again, sort of picking up on what I said before, people were expecting us to be surprised by the fact that folks would not want to give us access to data. But what we found was just the opposite. Because we made it super easy for a small business to apply for capital from Kabbage, we found that they actually got through the application very quickly. It was our goal at the time when we started the company to have a small business owner be able to land on our page, never known, never seen before, and actually get access to capital within 10 minutes if we approve them and approve them for a specific line. So that was always our target, and that's really what we were able to achieve. And so that led to really high conversion rates. And the other thing is, think about conversion rates a little bit differently. For us, it was about them landing on our site, coming through and getting access to an account and to capital. But even for those businesses that we had made a decision on, and that decision was not positive because maybe the business was too small at the time, or they hadn't given us access to enough data sources, we could go back to them and basically say, you're not yet qualified, but there's opportunity. So keep us connected to data and actually connect more data sources. And this really did a couple of things. One is it increased our conversion rate over time, overall from initial applicant pools that would come in. And the other thing is it really expanded our relationship for those customers that we did approve, did provide capital to. We could watch those businesses and basically have this concept of continuous underwriting. So if the business was qualified, and we would provide a line, we called it a line of loans. So basically it was a line of term loans. So you might be approved for $50,000. And if you took $10,000, that was treated as an independent loan that would have a payback schedule associated with it. And you would have the other $40,000 available to you. Well, guess what? We might watch that business over a period of time and then be able to increase that line. Or conversely, we might, in certain situations, have to decrease it, depending on how that business performed over time. But people understood that. We communicated it clearly. But it really allowed us to make sure that that relationship scaled one way or another over time, and that we were always kind of up to date with the customer. And I can't say enough how important it is to have that continuous connection to the customer, because once you have that connection, it not only, allows you to manage that relationship going forward and understand that business really well, but it actually puts you in a position to serve them in a broader way over time. So over time, we were able to expand our aperture and introduce credit cards and introduce debit cards and accounts and other things like that, because we had that relationship with the customer and we stayed connected to them. Sorry, that might have been a little long-winded, but apologize.
We always say at Solo, an application can become a conversation. So if you constantly need the customer to be applying to different products and resubmitting their paperwork every single time they need something, it's a very clunky process. It's so expensive for the bank to be able to reprocess that information in the context of every product. But if you have that ongoing access to the borrower's information just one time, you can reuse that to pre-qualify them on an ongoing basis to every product in the portfolio And it goes from becoming like a very quick yes, no, to then actually establishing almost like a roadmap for the customer on how to qualify, even if they don't qualify today. And we always say, like, data collection today is such a heavy cost. Sometimes it's even a liability. And the goal is to turn it into a reusable asset that provides recurring revenue, but also helps the consumer map out how to get to the financial products that they need to qualify for over time.
And I do believe that, there's actually, it's funny, there's not a great word, I think, in the English language because we talk about application, and application in a traditional sense means this kind of one-time transaction that occurs with a counterparty, right? And in reality, we see it as this persistent type of application. I wish there was actually some word out there that might describe it better, but for now we'll have to continue to use application.
We really talk about too, the integrations are the key to powering this whole experience. And so Solo does support 4,000 plus integrations. We're going to be talking about that today of, how do you choose your application? How do you understand what borrower should be connecting you to with a financing application? And, some of these concepts that we cover in Solo, like Georgina talked about, this first initial connection to data, it's not just about making a faster application, but it's about starting that relationship. And so those are core tenets to Solo and core tenets to what we'll be talking about today in this live build of this application.
And by the way, like 4,000 data application, 4,000 data integrations. Again, I don't mean to riff on everything that sort of comes up on the presentation here, but it was one of the limitations that we had at Kabbage. We had, call it a dozen or 15 integrations that we painstakingly went through to have over a period of time. And that was really robust at the time. But I always believed that the more data that you can get from your customer, and the more you can learn about how that data relates to the performance of the business, the more individualized you can make the decision to the customer. And I had this theory when we started the business. I wanted to do what I called fingerprint underwriting, which meant that everybody kind of had a unique decision that came out, and that would be based on a variety of data. But really, this is where the world is going. And so I think there's a lot of people who are hesitant to move into the world of applications that are driven through data connectivity. But this is a when, not if situation. And so it's just a matter of time before everybody's going to have to adopt an approach here. And the earlier that you start adopting that approach, the more of a leader you're going to be in the space, and the more you're going to be able to drive sort of the conversation going forward with other, in the industry, and really be seen as one of the original founders of sort of this movement, if you will.
That, I think, it'd be great to see these concepts in practice. So Georgina, I'll turn it over to you so that we can take a look in the Solo web application builder.
So before we kind of go into it, I'd love to set the stage by talking about, like, we really, when we start an implementation with a customer, we really try to understand what is the process today and how does introducing a new customer experience fit within the existing underwriting process. It's great if we can acquire lots of information from the customers, but then if we don't know what to do with it and how to use that for underwriting, it becomes more noise than signal. And so one of the first things we look at before we even start thinking of what integrations are needed is what is the existing underwriting process today. And so in the case of Breakout, much like a lot of the banks we talk to, it started with a spreadsheet, and it's a spreadsheet that has existed for a decade and is used to underwrite and calculate the debt service coverage on multiple products. And so usually it starts off with something that looks, and there's no data here, but it's something that looks like this, and every bank has some version of this. And our first order of business, before we even get to the customer-facing parts, is to figure out, where are you getting this information from today? And so whether it is from an online application, or it's from brokers, or it's from a specific file that you're getting. It could be like tax returns, it could be bank statements, it could be credit memos, it could be any of the above. We will try to create a mapping of it within our system. And so it starts with our implementation team essentially building out the reporting. And what that looks like is essentially, take this, for example, defining the fields just like they would be on a spreadsheet inside of Solo and defining where the data sources are coming from. So in this case, it's coming from bank statements, and then in the future, it would be coming from Plaid or potentially QuickBooks or any of our integrations. We haven't really gone into this because this is a webinar on account integrations, but we also support file types. And so if a bank is not ready to yet introduce integrations, we have a very similar automated spreading product that works just the same on paperwork as it does on account integrations. But since we're focused on account integrations, I'll leave it at that for now. And so after we kind of define where the calculations are happening and what inputs are needed, we then will go into defining the data sources. And so in this case, we, like I said, have 4,000 plus integrations. We can send out the list after, but we have everything from like CRM to payroll integrations to accounting integrations, all of the Plaids and Yodelies of the world for bank accounts, brokerage accounts, like you name it. So it first starts with defining what are the data sources that we need to collect. So in the case of Breakout, we look at it per product. And so they have this merchant cash advance product that is very heavily focused on cash flow underwriting. And so in that case, we looked at what is the data source that they use today, which was bank statements and sometimes accounts receivables, statements. And we had to identify and map out a real-time version of that, which in the case of this product was Plaid, and then potentially accounting integrations as well. I'd love to just pause here and go back to Rob on like, how do you choose what integrations to start with when you're building out the application for the first time?
Yeah, so most credit policies are focused on trying to figure out your likelihood of repayment, the stability of the company, the robustness of the company. Like there's some basic tenets, and what's happened over time is most organizations have developed a list of documents, and data related to those documents that either suggest that this person is deserving of a loan, or they're not deserving of a loan, and how much of a loan you should provide. A lot of these documents will help you figure out these criteria in both the same and a slightly different way. You can find out what bill payment history has been and how they've handled their expenses in the past. You can figure out stability factors like how long they've been in a particular location, or how many employees they have. If you're getting payroll data, which is really interesting data, you can see whether the employee group has grown or shrunk over a period of time and how it's grown. Have you hired more higher paying people, or higher paid people, or more people who are earning less money in the organization? And you can infer lots of different things from this type of data that you can never get from just a kind of two-dimensional application. And so I think that the thing to do is to figure out, your credit policy, what it is you're trying to really achieve and what you're trying to figure out. And you should look for, the types of data that you're utilizing in your existing application, but then expand the aperture to say, okay, what else can help me understand sort of the stability of this organization, the robustness, what their bill payment behavior has been, all of those types of behaviors, and really try to map that to the credit policy and move over, move in a direction where you're actually utilizing more impactful and frankly more current data. A lot of data that's relied on for credit applications right now is in arrears, right? So it's data that happened 90 days ago. And by the way, it's data, it's a static piece of information. So what you don't have is you have static information from 90 days, but what you don't have is, and by the way, most of these data sources, they go back in time. So you can actually see what the data was 6, 12, 18, 24 months, in some cases 36 months before, and you can actually see. I used to like to say that the space in and between the data is more important than the data itself, because you can see where that data is headed. And you're going to make a better decision. You're going to be able to work with your client. You're going to know more about that business sometimes than the business knows about itself. And so just encourage organizations to start, start small and start looking for basic information that you are comfortable with and your credit committees are comfortable with, but then add in these other data sources so that you can back test it and see how that has been performing as that relationship grows for you. So you don't have to do everything day one, but what I would highly recommend is that you try to utilize as much data as possible so that when it comes time to thinking about how your credit model can evolve and your credit policy can evolve, you're able to do that. Does that make sense?
Yeah, definitely. I will follow up by also saying I think sometimes there's a bit of an experimentation process when it comes to like deciding what data sources are relevant for what product. Just off the bat, I think one that seems to be like a really good idea in the case of small business loans is let's connect to accounting integrations and make that the required integration. And just something that you probably wouldn't know unless you go into production and iterate very fast and be able to disable and enable integrations on the fly and iterate on the application, similar to iterating on a landing page and then testing for conversion, is most small businesses don't have their accounting up to date at all times, ourselves included, by the way, and we're venture backed. And so if a bank tells me, log into QuickBooks, like, sure, but that's going to be just as bad as if I pull up, statements because they're just not up to date. One that I think is like underrated and a report that I love to run with customers is, especially if they're in the accounts receivables or factoring or even working capital loans like line of business, is pulling up invoices from the accounting software and running it against real-time transactions in Plaid, and then being able to create a very, very quick accounts receivable aging schedule or an accounts payables aging schedule. And that's a much better use of the accounting integrations, but that's just something you would not know unless you go live. On the consumer side, what's always been interesting to me is, every lender or bank has their own definition of what they deem, qualified as income. And so we'll work with like a mortgage product that for them, it's very strictly what's on the tax return. For another bank, it could be way more flexible. It's like, we will look at payroll records, we'll look at any investing activities over time, and that will be our calculation, and that will then impact the debt service coverage. And so even simple, things that go in your spread, when you really think about how the application process is today, with banks asking borrowers to self-report their information. Imagine how much context is missed when you're asking a borrower to tell you what their income is. They have a number and they've defined it as their truth, right? My income is X. That's how I've calculated it in my mind. The bank then has no way of tracing back how that calculation was done, because it's, trusted customer data collection is not just about, is the borrower saying the truth when we talk about verification? It's also, is there a shared language of credit? Is the bank telling me, the income is calculated this exact way, this is how we need you to do it? That just doesn't happen on an application. It's the borrower self-reports, and the bank has to reverse engineer how that number came about, and then usually recalculate what that means. When you ask customers to log in to various accounts or just provide you with their tax return or provide you with the rawest form of information versus filling it out themselves, which is high friction, and the bank has to recalculate it anyway, so it's like a lose-lose. there is just more transparency and traceability and control over how it then gets utilized in the spread and then the debt service coverage and then impacts everything as a whole.
Yeah, and it also, look, it erodes trust between both parties. It extends the time frame, and there's a famous line is time kills all deals, right? You're competing for this relationship with this customer. And it just breeds a lot of frustration. One of the reasons we wanted to create a relatively short time frame for application was not because the business needed cash in a hurry. It was because that small business owner, as a small business owner, has 75 million other things to do every day. And so if you necessarily require that if you say, look, this is going to be a 10-minute or 20-minute or an hour or even make it a day, like it's so much better than it is today for most people. Like it necessarily won't take more, they're not going to spend more time than that on that, right? So this is all about, connecting with the customer, realizing that you want them to be focusing on the thing that they do best. And also, a lot of these businesses, they don't have CFOs, they don't have VP of finances, they have bookkeepers, and a lot of the bookkeepers do things all very, they're all doing the right thing, but they're all doing a little bit differently. And it just creates static, waste of time, frustration, distrust, all these types of things, which is the last thing you really want to engender when you're trying to build a new relationship with a customer.
Absolutely. I'll quote Carson Lepetito, who's the CEO and president of SunWest Bank. He was telling me, I think their incentive for automating their underwriting was not necessarily so that they could get to a yes, no faster. It's not just about like the short-term profitability gains or the operational efficiency, but he was telling me it's a function of risk, because if we have really high costs in processing these applications, then we'll have to make up for it somewhere. And so we're going to have higher spread on loans. And that means that we're going to have higher rates than a lot of people. And the best borrowers are not going to stand for it. The best borrowers want the fastest decisions and the lowest rates. And so there's like this adverse credit selection risk that comes with also just having very clunky, slow, high friction processes that from a risk perspective, you might think that it's due diligence to go into a credit committee when most of these processes are repeatable, and you could tell me where everything goes on a spread and we could fully automate it to have the same results, without the operational bloat and the clunky borrower experience.
Completely agree. And it also limits it. Not only does that, they might either increase the spread or they might just say, look, anybody that needs less than X dollars, we're not going to serve, right? Because we can't make it economical. And so it limits your total addressable market, and it makes these customers go somewhere else, or it frankly creates stress for them, and maybe they can't get that loan anywhere else, or they don't believe they can. So it creates all sorts of issues.
Going back to this application builder, so one of the biggest perks of also having integrations is that you can make the experience pretty seamless on the borrower side. So you no longer have to ask them, what is your revenue? What are your margins? Like, what is your income if it's a consumer application? You can simply just ask them to log in. And with Solo, we've developed the features to be able to enable any of the 4,000 integrations on the fly. But then also use those integrations to then autofill the rest of the application for them. And so what that means is in the next steps where you actually have these forms, you would actually be able to, and this is more a function of risk and a longer conversation, but there are fields that you would be able to autofill through previous authentication. So after we've asked them to authenticate their PLAD, we already know their phone number, we know their payroll, we know their annual revenue, and we don't just like roughly know it. We know it through the lens of your own calculations and reporting because we've set it up on the back end to be able to do that. And so the form is built to be an iterative experience, which was one of the most important things about this process. We mentioned early on, Kabbage got to an 85% conversion rate, which is insanely high. We barely see, even today, like 10 years later, we rarely see conversion rate that high. And Rob, I'd love for you to kind of give us a synopsis of what was happening behind the scenes, but I imagine it took a lot of iterations. It wasn't like release it and get to 85% conversion right away.
No, absolutely not. I mean, it was a constant effort to refine. And again, we didn't have the kind of tool you have here. So, the challenge is we would ask for data. You might not have that data. You had a different data source, but we didn't have an integration with that data source. So, I feel like, if we had this tool, our conversion rate would have even been better or higher than it was back in the day once we had reached a level of maturity. But it was a combination about setting expectations as to what we were looking for, the fact that we were going to have you connect us to your accounts, the fact that this is the type of data we would pull, that we would keep you connected to that data, like all these factors. And then sometimes because of the technology we used at the time, there would be a problem, right? Something would break or something wouldn't work. And so, that was a matter of having somebody follow up on the phone and helping them get that corrected. So, we were able to achieve, but that didn't happen in any kind of overwhelming majority. It happened in, maybe 5 to 10% of cases. That was something that happened. And by making sure we had the right follow-up with the customers, we were able to actually increase the overall conversion rate of those customers and then again keep them connected over time. So it was definitely a trial and error, but we were committed to it. And I think that was the most important part of this. We said, there was plenty of people who said, hey, why not just also have a manual queue, right? Why not just have a manual? So give the customer a choice. Say you can either go down the manual route or you can give us access to data. And I guess my theory on that was at the time, if you give people a choice, they're going to go with what they perceive as sort of the safe route. And they're going to choose the manual path, even though that's the less beneficial path for them, right? There's more friction, higher likelihood of not converting, all those types of things that were happening. I said, no, we're committing to a digital experience here. And that's how it's going to be. So, I think that was really important because there was a lot of people we were competing with at the time. And, electronic or digital was hey, if you don't want to go down the manual path, you can also do this. That's sort of the wrong orientation. And it really also comes down a little bit to DNA. And, for us, our DNA was a digital DNA. And I do believe that companies can adopt that type of DNA over time, but it's going to take a commitment to do it. And it's going to take, I think, a lot of courage to say, hey, look, we're going to move to something that's purely digital. And in the short term, we're going to lose some benefit because it's going to be hard to make that change. But in the long term, it's going to be much better. And so that, I think, there's a lot of answers as to why we were able to do that. But I think the DNA and the overarching full commitment to it were really the reasons why we were able to achieve it over time.
Rob, just touching on something that you mentioned, which is, if an application was abandoned and how you would nurture that. I think one of the pieces around Solo that we really wanted to give lenders and banks flexibility on is we try to make it so that not only is this an iterative process where you can launch an application, look at conversion, see where there was drop off, and then change those steps, similar to how you would on a landing page or any other kind of campaign to acquire users. But we have made it so that you can actually create multiple applications. And so let's say you service, 4 different segments. What I think we're moving more towards as an industry is personalization. And so let's say you're targeting construction companies for a specific product type, and the documents required for upload or the integrations required look very different than like servicing native, like online native, tech startups, right? And so being able to build out different experiences for both segments and then also distribute those applications in different ways was one of the things that we wanted to make sure was flexible in how this was built. So, some of the experiments we've run in the past is how do you autofill most of the application from leads you have in your CRM? So most of you probably are targeting specific, customer segments or have some sort of prospecting tool, and being able to generate an application that is almost pre-filled for the customer, has their name on it, their industry, the exact integrations that are relevant to that industry, just also adds an element of meeting the customer where they are versus letting the customer kind of like try to explain themselves to you. And then in the long term, we always talk about the application being the opener to nurturing that relationship, even if it's not yes right away from your bank. And I think those little details are, I think, how you win long term the relationship. We see a lot of banks that come to us and think that naively think they can compete with fintechs on speed. And I would love to live to see that happen. And hopefully Solo is part of that transition. But I think the biggest thing that banks can compete with the fintechs on is on relationships. And so we've really, worked to try to turn this application into a conversation that scales best in class relationship banking. And it's in our DNA as a company as well. We're backed by community banks, and community banks definitely are not optimizing for speed most of the time. They're trying to win over the relationship long term. And so, the ability to customize different journeys and experiences for each segment and doing it completely no code. Like this was not built for a developer. This was built for your innovation officer or even, someone on your risk team, as long as like everything is mapped to the workbook. Yeah.
And I actually got a question in the Q&A box. So when you talk about autofilling applications, can you explain how that works from integrations?
Yeah. So after you've asked someone to connect their payroll, you should not be asking them what their income is. That's just redundant. And so the way that the autofill works on the Solo side is before we even create those fields that are required to be filled in on the borrower side. So something like, what is your annual revenue if you're a business, or what is your income as a consumer? We have already set up the logic of how that information is going to be processed way before we created the front end. And I think, McLean can attest to this, having gone through implementation with Solo. We always start with how is this being processed by the underwriter before we even go into the front end experience, which is, in the case of Breakout, this is how this data point is calculated. And so we go into, what exactly do we need to collect from that integration and how is it being processed? And then asking the customer to fill it out again is super redundant when the reliability of what they say is much, much lower than if we have controlled the calculation around the autofill and we've already asked them to permission the account and can autofill it based on our logic versus their understanding. And so there's, from an autofill perspective on the application, there is the autofill, which makes it easier for the borrower and then also just more reliable information for the lender. where you're auto-filling the fields with custom calculations from your spreading or workbook or whatever you're using. And then there's a second type of autofill, which is, Breakout's CRM is on Salesforce, and they have a list of prospects and leads that they want to engage, maybe people that have filled out an application and just never completed it. And being able to autofill some of those fields using information that you already have on the customer, just to make it a little bit easier on them, but then also more of a personalized experience, is the second way that we leverage autofill. Awesome. Any other questions? Thoughts?
One thing I wanted to, as a follow-up to what you said about, use the construction company as an example, this is a little bit further, in the future potentially, but, one of the things I think you can do when you have access to dynamic data like you have is understand the customers and ultimately differentiate the type of products that you offer to them. So if you have a restaurant that, and a construction company both earning $1.2 million a year, I'm just making up a number, right? So the restaurant's doing $100,000 a month, and the construction company is doing 4 projects and earning $300,000 each 4 months, but they earn it in a lump sum format. They might both need $100,000. And again, I'm using this as an example, but they need to repay it differently, right? The cash flow of each company is very different. So if you have that data, ultimately, and again, this is a little bit more forward thinking maybe, but something I always wanted to do at Kabbage, but never was able to do, was create that dynamic product that really worked for both the restaurant and the construction company as a specific example here. This is, again, something that you can do, and I use a very simple example, but there are, when you have access to a variety of data, you can really understand the cash flow of that business a lot better, and you can match a repayment schedule that matches a cash flow schedule. And frankly, you can get paid potentially for the additional risk you take for delaying the repayment schedule from like a monthly repayment schedule to maybe something a little bit different than a monthly repayment schedule. And the construction company in this particular example will be very happy to do that because nobody can make that accommodation for them today. So it's just, again, I bring this up not to say go ahead and build a product like that. I bring this up to say that when you start to allow yourself to think about incorporating dynamic data into your system, the opportunity for innovation in the organization grows exponentially. And it's a really important thing because it sets you up for what the next 10, 20, 30 years are going to look like in that organization and what you're going to be able to accomplish. And you're going to be leap years ahead of everybody else, in the field.
We actually have a consumer lending company that's doing just that, which is customizing the repayments based on the payment cycle of the consumer. And no, I think there's so many opportunities that can come from that. I think traditionally banks have always been product oriented. And so they have this portfolio of products and they're pretty standard and they kind of like force them on everyone, whether or not it makes sense. And I think what having dynamic data allows you to do is to be customer oriented versus product oriented. And so really understanding the DNA of that customer, what their repayment looks like, and being able to not necessarily create a custom product per person, which I would love to see in my lifetime, but being able to adapt things like the repayment schedule, be able to, create different dynamic pricing, for various risk levels. It opens up the door for a lot more customization, but also just better risk practices in general. Oh, I can't hear you. I don't know if it's
Yeah, I'm sorry. I went automatically on mute. I think Kaylee was like, he's got to shut up at some point.
I got it.
But it allows you to proactively communicate with the customer, right? And say, hey, I noticed that the nature of repayments has changed in your organization. Looks like you're doing fantastic, you're growing, and imagine if you were a customer and you received proactively a communication from your bank saying, we see your business is changing a little bit, and we'd like to figure out a way to accommodate that. Like mind
Yeah,
blown, customer for life.
for sure.
And like those types of things, which again, they're infinite in nature, are available, when you have dynamic data.
Yeah. I'll share a personal anecdote that happened. Now it feels, I think it was, when did SVB crash? Was it last year? Everything's a blur.
Yeah, it happened in
Really? March. It was a
happened in March 2 years ago, right?
few
Or
years
something.
ago. Wow, long time. So SVB crashed, guys, and we had all of our deposits at SVB. And we had been working with a revenue-based financing company, a couple actually, that we connected our data sources to. And we had like our Stripe account connected, which is how we collect payments from customers. We had our bank accounts connected. And that weekend, I remember just being like, everyone was freaking out, obviously, but I was like, how are we going to make payroll? And I had two fintechs reach out to me. Both founders texted me and said, hey, we see that all your cash is in SVB, but we could also see that you have like payables coming, like they were already collected in Stripe, just hadn't hit the bank account yet. And so they were like, we're offering payroll financing and you would qualify for it. Do you need it? And I didn't know what payroll financing was. We'd never, heard of the product. I think they created it during that weekend, honestly, to accommodate for, people in our situation. But I wasn't left, like no bank called me to offer help. Everyone called for deposits after, but no one in that moment knew what we needed, but also knew that they could underwrite us based on receivables that we already had sitting somewhere else, but just couldn't access in a bank account. And so the power of like a bank coming to you and saying, hey, like you might not even know that you qualify for this product makes it so that it's not like, even today going through an application process, I spray and pray, like, and everyone does, right? You apply to like 10 different places, you go through all these different applications to see what rates you can get. And then if you need a different product at the same institution, you reapply and it's an entirely new process. And it's insane that we still have to go through that. But having the dynamic data makes it so that the bank can come to you versus you coming to them every time you need something. And it's much more proactive and relationship based, which is what we're trying to do with Breakout now.
And
which is why they'll win.
Another question from the Q&A box. Can you talked about customizing applications and like filling it out from a CRM. Can you show in Solo how you would create more than one application and how you would add an integration to those applications just one more time?
Yeah, well, I can't show the integration without logging into an actual CRM, so I won't do that live. But if you guys want to test it out after, feel free to reach out to us, and you could test it on your own CRM, so you could autofill your own applications. But yeah, we have multiple applications that you can build out for at the same time. So you can have like 4 applications live at the same time with different integrations connected. So you might want to just test Plaid and make that required, and then maybe have it be like a super lean application where you're asking for very minimal information. So we actually have a customer that's live today that's only wanted to have Plaid and then confirm the social security number and then call it a day. And everything else is pre-filled for them. So they already have, obviously, it's a consumer company, but they already have like the name and then the email pre-filled from their CRM. And then they just make the SSN required. They had, it's an SSN 9 numbers. I don't know. I think so. Yeah, they make it so that that's not optional. Everything else is pre-filled from their CRM, which they've connected prior to this happening. And then they make Plaid, mandatory, and it's literally a 2-page application. So you might want to go really aggressive and experiment with a flow like that, but then also launch like, a more elaborate flow that you then, test out with many more integrations that you enable, and a much longer form where like everything is presented. And you could launch both of these at the same time, test conversion. You could launch one to initially get people through the funnel and then follow up with a longer one. There's a lot of flexibility in how you release these iterations, and use like feedback from releasing them to, optimize and eventually get to 85% conversion or higher, hopefully.
We have another question here. Is the form self-hosted? How do you optimize the flows without user or UI/UX data?
Yeah, so we have the ability to deploy it wherever you want to. We actually have an iframe. If you guys have like your own application that already exists, or you're using like a loan origination platform, and you have your own experience, we can actually like iframe it into your own experience. We can publish it on your website. We can build custom links per customer. So the way that you would optimize personalization, for example, would obviously not be the link that you publish on your website or the generic one that goes inside of your application flow, but you could release it as like a custom link that the sales team reaches out to the customer to fill it out in an email, and that one can be hyper personalized. So it just depends on where it is in the funnel. Obviously, if it's super top of funnel and you know nothing about the customer, then you do it maybe per segment. And so a way to optimize the user experience in that sense would make it so that if you have 4 products, or let's say you have 4 segments that you service, just the kind of questions and integrations that you would ask of a construction company would be very different than one you would ask like a restaurant business owner, or one that you ask for like a mortgage product. And so that's like a way to personalize a journey while still having it be pretty top of funnel. But then as you go downstream, you have more information on the customer because maybe you've engaged with them before, maybe they came in through somewhere. And then in that case, you can hyper personalize it using your CRM to autofill it, and then send out those custom links by email, or, within the banking experience within their actual account. So there's multiple different entry points for this application to live and exist. And obviously with each kind of like placement, that experience should look slightly different.
And the webinar chat is now enabled. Thanks for everyone that let me know that we needed to turn that on.
I got so many texts, I was freaking out. I'm like, what?
So if you have any other questions, feel free to drop them in there. I actually have a question for Rob too, speaking about optimization. What were some of the signals that you looked for at Kabbage, and your team really, what was like, we know this is working kind of signal that you guys would index for? And you're on mute. Sorry, Rob.
There we go. That was my fault. When you say like for conversion, or do you think, or just like in general that we knew things were working?
I mean, both. In general.
Well, look, we didn't know. It's funny. Early days, I talked to somebody at PayPal, and they were so excited about what we were doing, and they were still connected to eBay at that point. They agreed to put us in their outgoing newsletter to online sellers. Like eBay was how we were doing this initially. Just put in your eBay ID and we give you a loan, pretty much. And they put it in one Thursday night, and it was like 8:30 at night, and we started seeing our very first accounts come, and we all ran to the office, and we ended up with like 230 accounts in one night. And that was like the first moment that we knew something. And another time was we put a small ad on eBay as well, and we saw all sorts of folks come through. And what was really interesting, and what we were really testing, like, would people really give us access to data and allow us to, serve them in this way? And that worked. And then it was just a matter of figuring out, like, what hurdles do we need to take out? We did things like, well, you didn't need to actually take cash out the day that you created an account. Seems like basic, but because we were connected to data, we did not need to actually make the loan that day because the data wasn't stale, right? So we could approve you for a certain amount of cash. And if you took out cash 30 days later, that was okay. And that was actually groundbreaking for us because all of these, and I think a really important point, so let me bring this up, really important point of data connectivity is it drives your cost of acquisition down, which is one of the most important and most difficult parts of being in a business where you're providing capital is your cost of acquisition. But if you can make it really easy for somebody to engage with you, and you can also let them do it on their terms, meaning when they're going to borrow, how much they're going to borrow, all of these types of things, which are gifts that you get when you have people connect data to your profile, that drives down the cost of acquisition. The other thing, because we were connected to data, we were able to provide folks with a line of credit. And so our average customer borrowed between 13 and 15 times over 3 to 4 years. Our closest competitor was 2.1 times. And that was because we stayed connected to the data. And so we had two types of, we analyzed customer acquisition costs in two ways. One was third-party media that we're spending and how many new accounts we brought in. That was one cost of acquisition. The other cost of acquisition was total spend on marketing over total originations. And what we found over time, that dropped dramatically because 80% of the customers that were borrowing from us in a given month had borrowed from us before. And the only reason we were able to do that was because of connected data. And so that really drove the financials of the business. So like we sit here and we talk about all these amazing things about connected data, like you'll have a high conversion rate and bring it to the customer and get all sorts of unique data and have a better credit model and all. It drives down cost of acquisition. And when you drive down cost of acquisition, you can bring down price. When you bring down price, you can expand your market, or you can accept a little bit more bad debt. And when you're also doing things automated, you can operate the company with fewer people. So your OpEx shrinks down, which again means you can invest stuff into other parts of your business and grow that and grow the business or lower your price to your customers. And so consequently, more people feel inclined to borrow from you. So like all these things are connected and you know, not to overuse the word connected, but all these things are connected and you can't at all trivialize the benefit of connected data. It has impact across the entire spectrum of opportunity with your customers.
We're coming up on time. I think that's a really good note to round this out. So with Solo, we really want to invite, if you're interested in testing out something like this and one of these applications, we have an implementations team that can build you out a template specifically for your business with your underwriting book. So we'll be sending out this webinar recording to everyone that's attended and registered, and we'll be in touch in case you're interested in doing that.
Thanks, Sue. Thanks everyone for joining. Thank you, Rob, for all the wisdom, and McLean, thank you for letting us share the process. Yeah, we'll be in touch.
Take care.
Thanks, everyone.
Thanks.